Good afternoon traders. Welcome once again to today's live session, which we're going to have fun here. Going to enjoy ourselves as we also learn how to make some money and then make some money on here live. Once we get the opportunity. So once again, welcome. I'm happy to have you on board. Okay. If you can hear me loud and clear, can let me know by putting it in the chat, please. Thank you. So currently I'm in this buy trade on gold. I'm in this buy trade on gold. Okay. Alright, so let's look at some other pair. Let's see what's happening on NAS. Oh dear. Look at another beautiful move of NAS. NAS is giving us another beautiful move today. The run yesterday was so beautiful, and today too started its push to the upside. Started its push to the upside once again. So before I go on to look at any other thing, let me do what I usually do first to train our eyes. To train our eyes to do this every time, every moment we are sitting down trading. So over here, this is how we go about doing this simple but powerful strategy. So the tools that I use in trading, we have the 200 moving average, which is the red line here, and I have the 50 moving average, 50 simple moving average, which is this one as well. And I also have the blue line, which is the 20 moving average. So all of them are simple moving averages. So how we go about using this to trade is, so currently I've taken off the charts, the candlesticks. So that's the fourth thing we use to trade. That is the main thing, because this we are doing here is purely price action. It's purely price action. So we go through this all the time. Let me see. Purely price action we're dealing with here. So let's go back to where we were. So the idea is, before we get started, before we get started trading, we have to identify which direction we ought to trade, which direction we want to be heading towards. With that said, all you have to do to identify that is look out for this blue line. Where the blue line is, look out for this red line as well and the yellow line. So in a situation where you have all of them with price together like this, so I've just hidden or taken off the candlesticks, which is the green and purple candles that I have on here, or bars I have on the charts. I've taken it off for us to train our eyes to see how price moves each time it's on its move. So this, what we are seeing here are just the moving average, and these horizontal lines are some key levels that I placed there. But what I want us to focus on is these three moving averages. So whenever you find price above this blue line, price, the green and the purple bars that I have on my charts, whenever you find them walking above the blue line, that means we are in an uptrend. When you find price walking below this blue line, that means we are in a downtrend. We are in a downtrend. There are three things that price does. Either it goes up, it goes down, or it goes sideways. So whether price is going up or going down or going sideways. So those are the three things that price does. And our duty as traders is to identify what price is about to do, or the likely direction that is about to embark on. So with that said, we keep our eye on this blue line. So this, if price is above the 200 moving average, which is this red line, above the 20 moving average, and once it's above 20 moving average, it will definitely be above the 50 moving average, which is this yellow or orange line. So as we can see here, price moves from this state where you find all the moving averages including price will meet at this state, which forms or creates a narrow state. So from the narrow state you will find price moving to a wide state. Price moving to a wide state where it separates itself away from the moving average. So once that is done, it always finds a way to move back to the narrow state. So this happens to be in the narrow states again. The perfect one is here, the narrow states, because from here, let me take this off. So it was in the wide states and then pulled back to the narrow state again. So from the narrow states, it decides where it wants to go, whether it's the wide state will be below or above. So over here, when it came into this narrow state, it continued to a wide state which is below. So if you were looking, you could probably got into this trade somewhere here when it's got into this wide state up here. So as we're looking at this here, price should be above the blue line, but I'm doing this for us to train our eyes to spot the state of the market which it will be in at the time that we'll be trading, or at the time that we want to be trading. We need to spot this. So this is another narrow state here. This is another narrow state here. So from this narrow state, price went into this wide state. It went into this wide state, pulled back again to a narrow, and then again to a narrow state, then came back to again into a wide state, from this, considering from the distance from here to the red line and then the distance from here to the red line, this is nearer to the red line compared to this one. That's why I'm saying it came into a narrow state, or it came near to the red line. So the nearer the blue line, the yellow line, and price comes to the red line, that is where it forms the narrow state. So once they get away from the red line, price gets away from the blue line, it forms a wide state. So once it is in the wide state, what we'll be looking out for is price returning back to the narrow state. So as I've said always, the best or the ideal area to look out for an entry is when price is in the narrow state. When price is in the narrow state. So when it was in this narrow state, it dropped to this wide state and then back again. So over here, it's in the same narrow state that when price gets to, you realize that it's either moving sideways or price will be in a trading range or consolidating in the market. So over here, from this wide state, it came back to a narrow state and then started consolidating from here, from this point on. From this point on, this is too big. Delete. So from here, you could spot that price was in a narrow state before it began another move to the upside. Before it began another move to the upside. So it's from this narrow state again. From this narrow state again that we found price moving to the upside once again, then back to the narrow, back to wide, and then back to narrow again. So that is what we train our eyes to spot each time we are trading, because this is what gives us the direction that we ought to trade, that we aim to trade. So if price, the blue line and the yellow line are below the 200 moving average, we trade going down. If price and the moving averages are above 200, if price, the 20 moving average, the yellow, are above the 200 moving average, the red line, that means we look out to trade going up. As simple as that. As simple as that. And in so doing, we spot out some setups in this narrow states. Once we see them, we get into it. No second thoughts, no hesitation. Once there's a setup here, we take it going down. If the setup happens to be above, in an instance where the price is above 200, above the 20 moving average, and then we get a setup there, we take it going up. Okay, so at this point in time, I would put back the charts to make sense of what I'm talking about, to give us a much better view of things. A much better view of things as I'm talking about here. So, hello Josie, hello Chris, welcome. Good afternoon to you all. Okay, so let me put back the charts. Willis. Where are you? Come on, yeah. Okay, so before we started, we trained our eyes to spot where the blue line is and then which areas we are likely to follow through. Which areas we are likely to follow through in terms of the direction of our trade. So, as I was saying, this is the narrow state I was talking about, but we're looking at it without price on the chart. Now we have price on the chart, so we can see here what we are doing here is purely price action trading. So in the narrow states, the moment a purple candle takes out a green candle, or you can see a purple candle engulfing the previous green candle, we go in for a sell. We go in for a sell. If you don't enter on this side, we have quite a number of options here. So over here we had the blue line crossing below the 200 and they moved sideways. So after this crossover, we always expect price to pull back to the 20 moving average, or sometimes it falls in between. It falls in between the 50 moving average and the 20. So when that happens, you could either take your trade from here, or once price gets below the 20 moving average, you take your position from there. So this would have been your first entry when the purple candle engulfed the green candle, took out the low of the green candle, and then your stop loss goes above here. And this is another entry we could have gotten into add on position. So once you get in here, the moment the purple candle takes out the low of the green candle, you enter. Or the next thing you could do is to wait when it's print, or when a price has printed for about 1 minute 30 seconds, then you jump in somewhere here. And your stop loss will be here. So the only difference is from here to here. That means you have a little bit wider stop loss, but from here to there, your stop loss is much tighter. So on entering here, the next move is all the way down here, and then it's pulled back to the moving average again. So this is where you add on to your initial position. Your stop loss goes here, and then you leave it to run. Give us a ride down. Okay, let me take this out because it's not. Alright, so as I was saying, once you enter here and price moves away from there, gets into the wide states. From the wide states, price will move back towards the red line, or the 200 moving average, sorry. Then from there it will continue going again. So it's pulled back a little bit, pushed down, further down, and then made its way back to the narrow states again. So over here we can see there was consolidation, or price was moving sideways where there's not much movement during this time. It was in a trading range. So we aim to get into a trade once we see a sign price getting out of the range. So from here on, we can see price getting above the 20 moving average. Price is above the 200 moving average as well. So from here on, we get above the 20 moving average. Your entry could go in here. Once the high of the last purple candle is taken out, you enter here on this candle, and your stop loss goes here. And the rest is another history. So this is an area you could have added on to your position, added an additional position to your initial trade. Your stop loss goes here. So the thing is, you put your stop loss there. If the reason why you are entering is no longer valid, there's no need to be in the trade. That's why we put our stop loss there, because we also don't know what will happen in the trade. That's why we keep our stop loss when we are trading. If we knew what was going to happen, then we'll play it much differently. We'll go in style, dancing, because we know exactly what is going to happen. But because we don't know, that is why we keep our stop loss in place, in order to protect our account all the time. Because without that, we cannot enjoy the game longer. We need to enjoy this game longer. So to do that, we need to protect our capital. We need to protect our capital. Okay, let's see what's happening live in the currently on NAS. Let's see. So it's NAS currently, I would say it's in a wide state. So this area will not it's not ideal for taking positions here, because when it came to this narrow states, when it was in this narrow state, what time was that? Around market open, so around 2:30, 2:45, that area. So when price was here and this last purple candle was taken out, this is where we could have hopped onto this trade to ride it all the way up. So currently where price is now, there's a high chance or high probability that it's forming an M, then pull back to the narrow states. There's a high chance that it will form this M, where the first leg is almost completed. This might be the second one, then we have a pullback. Then if it will want to continue to go up, or it could also continue from here. But mostly, once price gets into the wide states, it wants to pull back to the narrow states and then push up again. Push up again. Just a minute, guys. I'll be back shortly. Sorry about that, guys. Here we go again. Okay, so just as I was saying that from this point on, I wouldn't be interested in taking new trades here. So what we normally do is, in the wide states, we take our profit. Or if you're not taking your profit, you take some of it out and see what happens next. Okay, so today being Friday, today is Friday, we're going to spend some time as well just talking about what we need to do as traders as well. As we know, this is our edge, this is our strategy we trade with. So that forms part of what we have to have as traders in terms of going on this journey, or going through this trading journey. So we're going to maybe have one or two things, look at one or two things psychologically, what we need to, how to position our minds, ourselves in conquering this game as well. So today being Friday, I ought just plan to put that with it as well. It's not all about making money. We have to prepare our minds well as well. Fortify our minds and be strong as we go about trading in the markets. trading in the markets. Okay, let's see. All right, so just as I was talking about earlier on, that's what is mostly happening. You can see the structure being formed like an M or double top, as some may call it. So we expect a pullback, forming a more or less a narrow state before it continue going up, or if it changes its mind to go downwards, this could be the beginning. Okay, that's cool. Yeah. So I'll just start with dealing with our expectations in trading. Okay, let me change this so that you can see me as I speak. Okay, I want us to have a look at dealing with our expectations as we go about trading, because many a times you might be in a very nice trade. If I say nice trade, a trade that is giving you cool profits, you can see the profit there, but because we might have built a kind of virtual market in our minds, our expectations are so high to the point that what the market is telling us, we are refusing to see or to notice it. And trust me, this in the past has been a pain for me myself, until I found a way to overcome it. And I believe it's something that every trader goes through. It's something that every trader goes through. So we're looking at it today. It's very important, and that happens to form part of the psychological aspect of trading as well. It forms part of the psychological aspect of trading as well. So you looking at finding a solution to that is a step in the right direction. It's a step in the right direction, because as we all know, the psychological part of trading takes majority of it. It takes a great deal of it, as we all know. So we have to be expectation free when we are trading. We have to be expectation free when we are trading. That means you got to be present to what you are having, or what you have on your screen present at the present moment you are trading. So with that said, yes, you might have built some virtual markets in your mind, or inner markets, where you, according to your analysis, you think price is going to travel in a very long distance. But again, if we go back on the charts, again, let's use here as example. Price, in your mind, price is going to travel for a long distance up. That is in your virtual markets, or your inner markets, if I call it that way, your inner markets that you have built up yourself, which might not be the same as the real market we are seeing on the screen now. So let's say you got into a trade here, and then your expectation is for price to travel about 2,000 pips before you, because probably based on your beliefs, based on your personal goals, you have calculated that if price get to about 1,000 pips, I could get my car out of it from this one trade. That is dangerous, very dangerous, because it's not real, if I should put it that way. It's just on some occasions that you might have that long instant run, but apart from that, you have to build it gradually, bit by bit, bit by bit. So, with that said, it is important to have an expectation-free trading mindset where you focus on what you are seeing on the charts, not focusing on your beliefs, not focusing on your virtual market you have built in mind, but you focus on what you see on the chart. So over here we can see price travel from here. As I was saying, if you entered somewhere here and then see where price got to this level, price got to this level here, it got here and then it turned back. It came here first, pulled back, came here again, and then we can see what is happening because it's been in the wide states. So from the wide state, it pulls back to the narrow states before it will decide again which direction it wants to continue, whether it will continue going up or going down. All we do is we look out for a setup. Once it falls within our plan, it falls within our plan, we don't hesitate, we don't give a second thought about it. Once it is in alignment with our trading plan, we strike, boom. Beautiful. So what I was saying is, once we move, we enter here, we look for the next likely area that price is likely to halt or to turn round from. So from this point on, if we look left, structure always leaves a clue. We will find that in the past, somewhere here, there was a time that price probably got there and turned round. If not, I think NAS is making a new highs. So I believe, let's see, let me go on the higher time frame. I think this is a new high that it has made. This is a new high that it has made. Other than that, it always leaves a clue that you find that price get to a place where it got there before in the past and then make a reversal from there. So looking at this from here, we can see that it's a new high that price has made now on NAS, because there's no history in the past where it's got to this level. Let me go to monthly. Yes, so there's no history in the past where price got to this level. So this is a new all-time high. A new all-time high. So with that said, there is a form of resistance at that level. There is a form of resistance at that level. Let's take into consideration our own key levels we use. So let's see which key level is nearer to this level area. So where it is now, it's 350. So it's around the 350 key level. It's around the 350 key level. As I always say, or I've been telling us, price moves from one key level to another key level. So whether there is a historical data in the past to give us a warning or there is not, we have these key levels that price mostly respects. So I'll put back my plenty lines on here. Let me stretch it out. So this is the daily time frame that we are on. This is the daily time frame we are on, and this level happens to be the 18350 key level. And we know what happens when price gets to these key levels. So it will travel from one key level to another. So currently we are holding at 18350 key level. Great. Let's go back to where we were before. There. Okay. So when I started, this is where price was. All this hadn't happened. So I said I think we were on this particular candle where I said it will probably form a double top and then pull back to create a narrow state, and lo and behold, that is what we are seeing here. So if you saw this green going up and then said price is halted here, let me buy here, you make a mistake, because you don't buy in the wide states. You take your profits from there. You only want to get involved buying when price kind of comes back into the narrow states, and then it gives you an indication or a setup or an event of going up. Then you hop on, you ride with the trend going up. Okay, so I was talking about keeping expectation free mindset when you are trading. Other than that, in a place where it is giving you a clear direction, this is a key level. This is a key level where you should be considering taking your profits. You'll be kind of holding until price goes against you. Come and take back all the profit it gave you initially. So this is the 350 key level where we identified earlier on. So from this level you take your profits because it's already in the wide state. Once it pulls back and gives a setup for a continuation, you can hop on from there, but not in the wide states. As I saw a screenshot of someone's trade where it took some initial entries when price began to make it move, and then at the wide states, that trader was still adding to the trades, was still buying from here. I looked at it, I said, no, this shouldn't happen. But that screenshot wasn't any of mine or our group or any of the students that we have. So it's nothing to bother ourselves about. So I'm just saying it's that in the wide states, you don't take new positions there. You rather want to wait until price come back to the narrow state and it gives you a setup from there. So even at this point, if we are taking a trade coming down, would have been profits, but now being in a in an uptrend, it's not always advisable to trade against the trend. To be on the safer side, you go with the trend. So this more or less is a counter trend trade. So that's cool. So we've had a look at keeping our expectations. For instance, before you even get into the trade, you have to identify where you are getting out, and then you have to keep it real. Identify a realistic take profit, not exaggerating it too much to the point that after entering, it's giving you enough money you could close or you could take out that profit, look for another opportunity to take another trade. But because your expectations are so high, you are not even paying attention to the money that the market has given you. You are not paying attention to the money that market has given you. So that brings us to the point that the money is inside us. is not in the market. The market is there doing its own thing all the time. The market is there doing its own thing all the time. So the money is inside us, not in the market, if I should put it that way. Because what is in your mind, controlling your mindset, is what will cause you to either close a trade or to hold on to a profitable trade to gain more out of it, or to pick a target and come out of it and keep that profit and look for another opportunity to move again, rather than having a mindset wishing, oh, that I'm wishing that it's going to get there. Never wish, but we have to always trade. We have to stop wishing, and then we trade what we see. Trade what you see, not wishing. I believe that is clear. That is clear on expectation. So if you have that to deal with that, identify before you get into the trade, identify where you want to get out of the trade. You also identify your stop loss. So in case all your analysis that you have done does not work out, you are only risking a certain small amount, not a huge amount out of your capital. So that is very, very important. Let's have a very good look at it, and then we will be good. We'll be good. Yeah, so that is one aspect of it. So in the first place, talking about psychological aspect of trading, first of all, we need to, you can't just go straight to looking at trading psychology where you don't have a profitable edge, a profitable strategy you can trade in the market. So first of all, you need to build or identify your own profitable edge where you go through it all the time to make profit. So number one thing is to have your profitable edge or the trading strategy that you have. So over here, our strategy we use is what I was explaining earlier. So with that is a proven strategy that's been making us money over and over again. So with that strategy, it's already doing well. So that is one. That's the first thing you need to work on. So once you get the strategy in place, you have that profitable trading edge. Once you have that, that's the first thing. The second thing is to put it down in writing in the form of a trading plan. So you have to trade using your trading plan, not your feelings, you will not be trading based on your beliefs, based on your thoughts. Once you have identified the trading edge that you are going to be using to trade profitably, the next thing is to write everything that you need to be following with that plan, with that trading edge or trading strategy down as a plan. So this time round, everything is written. So you are not going to be trading based on your thoughts again. You're not going to be trading based on your wishes. You're not going to be trading based on your beliefs or any form of virtual market. You have built it inside. You have to stick to that plan and then trade with it. In effect, that plan replaces you in the market. So when I say it replaces you in the market, when you go through that plan, you spot an opportunity. There's no time for you to rethink whether I should take that trade or I should hold on, or once the opportunity presents itself, it's in your trading plan. So all you have to do is to strike and get into the trade. Put in your stop loss, leave it to run, put in your take profits. This is how we have to go through the trading as we are talking about, this is how we have to follow it. We have to go through the process, and the process is what we have written down. The process is what we have written down. Yes, before we even get started in our trading journey, you might have your own personal goals. Yes, you can set the goals, but don't become fixated on those goals. Just have it in mind. Let it be on the one side. Leave it on one side, and with that said, you're going to formulate a plan in achieving that goal. But your mind is not on that goal to be specific. Out of that goal, you develop. Maybe you have to come up with a plan that if I trade in a day, maybe you come up with like a specific amount or a target. So with that target in mind, you are working towards a bigger goal, but at the moment you are only focusing on a small part of it. You are only focusing on a small part of it. So let's say you have let me go back on the chart. So let's say you have a goal of becoming a profitable trader by the end of the year 2024. Okay, yeah. A profitable trader. Profitable. Let's see how we can write this to fit in here. Profitable trader by the end of 2024. So with this goal in mind, then you come back to your trading plan. So your trading plan is what you have to follow every step that you have written down based on your trading edge, based on the strategy that we are using here. You formulate a plan with it that will in effect help you to achieve that target. And also, I've always said being profitable is not determined just by one trade. It is after a series of trades that you can identify whether your strategy you are using or the edge is profitable. So for instance, if we go through for instance, a series of trades, a series of 20 trades each time, by the end of the 20 trades, that is where we re-evaluate to see if what we went through, the trades that we went through, if it's profitable by the end of the 20th trade. Then you can say that yes, your strategy is profitable, but you cannot determine just by one trade. You cannot determine your profitability of your edge, your trading edge or strategy, just by the outcome of one trade. You cannot do that just by looking at the outcome of one trade. So we have to go through the series of trades. You have to go through the series of trades, and then at the end we identify our profitability. So with that said, with that goal, as I wrote on the screen, being profitable by the end of 2024 is, so now we come back to our trading plan. So in our trading plan, if for instance we enter a trade, we look for the next area of concern, we take our profit from there, we get in to the next trade. If that is what your trading plan is, then you follow it. You become consistent and follow it to the letter. It will not be like you come into the market or you come and sit behind your computer and depending on how you feel, you trade from there. No. What you are doing is you are trading with the plan, not how you feel on a certain day or not how you feel on a certain hour. You are trading the plan each moment, each time you sit to trade. I believe that's makes some brings some light bulb moments to us, because it's only by doing so, once we have our edge in the market, we devise a trading plan for it. Number two, then we focus on the psychological aspect of it, where we fight, where we work to eliminate fear and greed. We will eliminate fear and greed in each trade that we go on to take. So, for instance, if you identify greed playing a role in your trading career, you find a way to eliminate that. So from there you decide if not having unrealistic goals is what might be causing your greed habits, or producing that kind of habits in you. You find a way to take it out. You find a way to eliminate it, so that you can enjoy it, and then take out whatever profit that it might be presenting to you at each point in time. Okay, so that is what I will say based on what I plan to share with us today on the psychological aspects of trading, and also putting everything together. So putting everything together, we have a profitable trading edge. After having a profitable trading edge, you also should have a trading plan. That's the second thing. Then the third thing is, after you have your trading plan in place, you trade with it consistently. So by going through the process, trading with your trading plan consistently, that will help you to eliminate fear and greed. That will help you to eliminate fear and greed, because you are not trading your own beliefs, you are not trading your own thoughts and feelings. What you are trading is the plan that you have written down. So that will help us to go through it successfully and become profitable traders. Yeah, so I believe that resonates with us as we go through this process all together. Okay, so yeah, coming on these lives is not always looking at the charts and then picking out some trades. This also plays a major part in our success. So we spend some time also to look at it, as we have done today. Any questions, ladies and gents? Ladies and gents, let me see what's coming on the charts. Okay, let's see what we have here. Okay, that's gold. Let's see Bitcoin. Okay. So just as we've been talking, that's how price moves. Where from every symbol that you go through. This is Bitcoin. We were looking at NAS previously. So Bitcoin, as we see, was in this narrow state from here. And then from here it made its way all the way up to this wide state. So once it got to this wide state, it has to find a way to come back. So from this wide state, you can see price making its way almost back to the narrow state and even below the 200. So over here, if the price is already below 200, if 20 moving average gets below as well and gives a setup, then take it from there. So this is the reason why I said you don't take new buy positions from the wide state. The same thing when it's in a wide state in a downtrend, you don't continue to sell in the wide state. In the wide state, you take your profits and then probably could look for a setup to go down. So that's exactly what we are looking here. So guys, one thing that I will say is also from what we've been learning, what we've been looking at each day, each time together and also by yourselves is the same thing. Nobody knows what any particular trade will turn out to be. So that's why I'm saying if you spot an opportunity, just take it. If it falls, if it's in line with the trading plan, just take it. Put your stop loss in place because nobody knows if that particular trade will be your biggest winner of all or it will be a losing trade. So once you get into it, it moves above your entry, gives you room. You can quickly move your stop loss above your entry, or if it's going down, you move it below your entry. Then you allow the trade to run. You have to do this because that's the same thing I do. Just have confidence in yourself that you can do it. Have confidence in yourself that you can do it. And the truth of the matter is, losses are something that is part of trading. You cannot take it away. It's part of it. We don't know what exactly will happen when we take a trade. That's why we keep our losses in place. Sometimes when I get into a trade, I get my stop loss being hit. But once I get hit on my stop loss, that's not the end. I reevaluate the situation, the present situation, and if it's still valid for me to re-enter, I'll re-enter again. Like this morning, I posted a trade I did this morning on the group chat where my first entry, I got hit. I got taken out for the buy on gold, but that didn't put me off. All I did is I went in even harder. I put in a first 2 lots size. I got hit on it, or a price hit my stop loss, which took me out of the trade. But the next time I re-evaluated the situation and I went in 4 times my first initial input, and which turned out to be a big winner. So this, even though most on the online, on social media, you see people posting big wins and then flashy stuff in trading. They have that side of trading as well, which they don't talk about. But I'm telling you now that I go through that as well. I get hit on sometimes when I enter some trades. Sometimes I could get hit 2 or 3 times before the trade finally goes in my direction. But to tell you, once it begins to move in that direction, all that I got hit on, all the losses or the drawdowns I had initially, I get even more, times 3 or times 4, 5 of what the drawdowns I experienced initially. So I don't allow that to have any effect on me because I know that I'm going through the process. So if I am going through the process, that risk is a risk that I accepted before I entered the trade. So I knew that there's a high chance that I could get taken out of the trade. So if I get taken out of the trade, I re-evaluate the situation and then go in again. So for instance, this trade this morning was, it had come down giving a setup, but it pulled back again to form a W or double bottom before it took off. So from there, it's something I've experienced before, but sometimes it doesn't always happen that just on one test of the area it will go all the way through, but sometimes it will come back and then retest again. So with that said, the lesson we can take from there is you can wait. Once you see the first leg created where it gives you a setup for an entry, you could wait to see if there will be a retest or a double bottom or a W created, or if it's going up, you can wait to see if there will be a double top or an M created before you jump in, to be on the safer side. So that's the lesson we can learn from there. Just like on the NAS we were looking at earlier when we were here. So at the time we looked at it, it has just formed this, and I said it was kind of showing going down. As we can see, it came into the Y state. So I said, if this is going to form a double top or an M, which I drew when we started before coming down, and that is exactly what has happened. So sometimes it's good to look out for some of these patterns forming before, if you want to engage in it, you engage in it. But what I'm saying is, we all go through drawdowns. We all go through drawdowns. If you see someone posting big results, it doesn't mean that's the only thing they go through it. Sometimes you get hit on your stop loss, and that shouldn't put you off. Pick yourself up again and then move on to the next one. Re-evaluate the situation, see what is happening now, and then from there you can take advantage of it. I hope that sounds good in our ears, and then we'll take in some lessons from there. Right, so we've done almost an hour, 10 minutes. Yeah, I know we could have looked out for some trades, but my main aim here today was to talk about or share with you some psychological aspects of what we are doing, not to actually look out for trades. So if you can see any trade running, my intention was not to call out for trades, but just to look at the psychological aspect of trading today, which we have done. Great. So the main thing is, we know what we look out for each time. We know what we look out for each time. As I said, you follow the plan. So once you see what we look out for each time on your chart, that's what I'm saying. Don't hesitate. If it's in the right location, and then you have identified the direction is the right one to take, you go through the process, you go through the test, you go through the PCT test, and if it passes, you go through and then you strike. There's no point hesitating, rethinking about it, or suggesting any other thing, because you've seen what you are looking for. So once you've seen what you're looking for, you can just hop onto it, put in your stop loss, and then leave the rest to play. Okay, is there any questions, guys? So we're going to bring this session to a close soon, because I don't want to keep it too long. So we've done over an hour. done over an hour. Let's see if we have any juicy thing happening here now. So this is BTC once again, went to the white states, back to the narrow states, is now in the down push. We've looked at NAS. Let's see US 30. Alright, so just like NAS, they are all in an upward trend. So before this move began from the 38750 key level. As I said, it's moved from one key level to another key level. So from this key level, which price halted here for some time, that's where the move began. So you could have hopped onto this trade as the high of this last purple candle was taken out by this big bull candle. So you could have got in here to be your first entry. Then your additional entries here, your add-ons goes here. So your entry goes here, your stop loss here. Your entry goes here, your stop loss here. Your stop loss goes there. And you can see the ride, it took off from the 38750 key level to the next key level. And see the beauty of it. It just touched it, pushed up a little bit, and turned round. And as we can see, it's also in the white states. In the white states. So in the white state, you take your profits, you don't continue buying. So once it pulls back to the narrow states, that is where you look for an entry again. That's where you look for an entry again. This is the cycle that the market goes through each time. So all you have to do is train your eyes to these things, and then also add some other things that we have shown you, I've taught you, and then you'll be good to go. You'll be good to go. So for instance, we talked about having realistic goals. So if you got in here, at least we know, or we've experienced, that price moves from one key level to another. So over here on US 30, if you entered here, this could have been your profit target. The 38950 level could have been your profit target, and that would have been so smoothly run all the way up here, and you're out. You are out with nice profits. This happens all the time, guys. It happens all the time. So let's keep our eyes on it and then take advantage of it as we can do it. We can do it, and we do it again and again. Okay, let's look at, let me take this off the screen. We'll just take one trade probably. I'm seeing something cooking up on gold, so we can maybe hop onto that and then we call it a day. Yeah, so we can see over here price has taken the high of this candle and gold is pushing up. So the ideal place would have gotten into this trade is on this candle. So it still hasn't gone that far, so I will just get into this. Let me change this to my yellow. Or we could just wait for a pullback if it will give us. So gold here. Yeah, looks like it's pushing up. So as we always say, we can see how price came back to the blue line and then got held up between the 20 moving average and the 50 moving average, which is this yellow line. It got held up within that zone, and then from here it looks more of continuing to the upside. So it's like it's not giving us the pullback that we wanted to get to enter this trade. It's not giving us, but it's not far away from the blue line, so it still could play out nicely. Because when you're taking the trade, it has to be near the blue line, and its price is just around the blue line. So we're having the pullback there as we wanted. Let's see. I'll just go in here. Yeah. I'll take my stop loss, place it just below here. My take profit, I'll put it maybe just at the body of the previous high and see what happens, because I don't know what will happen, the outcome of this trade. I don't know the outcome of this trade. That's why I have my stop loss there, in case it doesn't work out as anticipated. I get taken out on my protected loss. Okay guys, so with that said, I think we'll end the session here today. If you have any questions, you can ask, or we'll have a nice weekend. And those of us who will still be trading on Bitcoin will still be riding it along, up and down, whichever direction it gives us. So currently it's turned out to be, it's in profit now. The gold trade is in profit now. So we'll leave it around to see what comes, the full potential of this entry. So once it makes its way further up, all I will do is to move my stop loss above my entry, giving me a risk-free trade. With that said, thank you very much guys. I really appreciate you being here. God bless you all and have a wonderful, wonderful weekend.